If you're not spending some form of time in AI daily, you're missing the boat. And the reason I say that is because it can help you be a better strategy. There might be things on here that you've heard us present. Put it in there. Like, hey, they were talking about a financial planner referral. How do you best do that? Put that in there and get better. Challenge yourself to be better. And I think that's ultimately what we have to do as an industry. The market is the market. Homes are going to continue to sell. People are going to continue to move. The best time to buy a home was it yesterday. The next best time is today. And I think if we just have that mindset, we continue to move the needle forward.
Hey guys, Wally, Elibiary. All right, so what is 24/7 mindset? Most times when you hear 24/7, you're thinking what? 24 hours a day, 7 days a week, just grinding, hustling. You know, I learned over time, a 24-year career in mortgage and multiple other businesses that I own is, unfortunately, you'll get burnt out. I became an absent father, I became an absent husband, and I became a poor business leader because I was trying to work 24 hours a day, 7 days a week, trying to build a business, maintain a business. When I learned how to work smarter, not just harder, by doing things the best way it could be done, instead of just simply doing my best, I learned how to work only 24 hours a week, 7 months a year, while I got paid from the business residually 24 hours a day, 7 days a week. You can do the same. Welcome to the show.
All right. So first things first, I am not really a small guy. He's just like huge. So I'm in my little booster seat over here trying to sit up as tall as I can. Hey guys, it's Wally, Elibiary, 24/7 Mindset. I'm excited about today's podcast for a couple reasons. So I had Rich, we had lunch probably, I don't know, almost a month ago, maybe? About a month ago.
Met each other.
And what's super cool is like we're in the same town, same city, same industry, and we absolutely hit it off. But what was really great about that is he was sharing so much wisdom. I think I was maybe bringing a nugget or two to the table. That's questionable. But it was great because it was an awesome mastermind, and I kind of want to recap some of that today.
Please.
But then also more importantly, you just dropped a huge bomb a few seconds ago, which you definitely need to watch for the fact of understanding how his brain works and how valuable he's going to be to his database.
No, absolutely. So one of the things we were just sharing is, you know, my kid plays high school football in Texas. So one of the values of that is they're preparing today for the first game. The first game's 3 weeks away. Focused is on that game. That being said, as I kind of tied that into our mortgage business, and you know, we're hearing rates are going to get cut, rates are low. You know, what do we do? And we have a mindset of strike rate. Everybody had low interest rates, things of that nature. But what are you going to do when the rates are dropped? And then are you going to be able to react at that right time? And I think if we look back over the last 24 months, there's been 2 or 3 rate drops, and I want to say they've lasted 4 to 8 days. And if you were not prepared in those 4 to 8 days to take advantage of it, you missed it. And we don't know, you know, we'd like to think that rates are going to go low for 3 months or whatever the case might be. We don't know. So you've got to be prepared to react. And I think that's what we've got to be able to educate our database with, our partners with, is, you know, just because your rate's there today, what are we going to do to make it move forward?
Yeah. So, I mean, let's just jump into it. Do you feel like it's the disillusion of a loan officer to think that rates are going to go from 6.5 to 6.3 to 6.2 to 6.1 to 5.8 versus the reality of it needs to be that rates are going to go from 6.5 down to 6, but quickly jump back up to 6.25.
Yeah, I think if you look back at the last one, it dropped, you know, so I want to say it was November of 22 that they dropped our last cut of a half point. So let's just predict that September's a half cut point. That's going to start being built into the market because the value will be spoken about that way. The expectation is. And so then at that point, that lasted truly 8 days. And so rates had dropped. I want to say at that time, maybe to your numbers, it was 6.5, and I want to say it dropped to 6 1/8. Okay. And then it jumped back up to 6 3/8. Right. And so there was that movement. But if you weren't prepared, or if you're like, I'm going to wait until the day it drops to then get pre-approved and then to start shopping, you're 30 days out and now the rates moved again.
Yeah. Well, also you and I, they're all super jealous about the competitive advantage that you and I have being the broker space.
Right.
I'm just totally teasing you. But being able to I remember when rates dropped, I got a client to lock in at 6.3 and they were like a 7.5. So they're tickled thing. Rates dropped down to 6.125. Most retail mortgage companies, they're kind of stuck in that spot. Hey, if the rates don't drop a quarter, you can maybe drop an eighth, kind of a deal. Like all you and I would have to do is just change investors.
Right.
And I want you to elaborate on that. I mean, you've been in the retail space previously in the past, right? And then you got in the broker space and the wholesale space. How has that helped you serve your clients more for the fact of that the rates?
Yeah, I think what happens is you're not just taking an order. Let's come in and say, this is not, I'm not going to throw any fast food chain around, but I know my kids go through a lot of them. So you're not going to go there and say, hey, I want number 3, right? You're going to go through there and hopefully speak to a professional that says, hey, here's your 4 options. I know you and I definitely appreciate Mortgage Coach and Dave Savage. He gives us platforms to put that out here. Here's option 1. Here's option 3. Which option do you want? Here's the different advantages of them. Yeah. And I think we've got to be prepared for that. And I think it's ultimately our job as the loan officer to look at that. Everybody thinks it's our job to, approve them or decline them. It's really not. Our job is, can you financially afford that payment and make your payment? And then are these the best options for you for your goals?
Yeah. I agree with that for sure.
So I was at a networking deal on Friday and I did a little presentation. I said, hey, who here has ever kept a 30-year mortgage?
For the full 30 years.
Full 30 years. There's 105 people at this little chamber.
Let me guess. I'd probably bet I got $1,000 cash on less than 3 raise their hand that they have. 1
raised her hand. She was adamant that she did it, right? Adamant.
You owe me $1,000.
Adamant that she did it. I said, and so I was just kind of taken back. And I'm like, so you've never refinanced or never did anything to that 30-year mortgage? Well, she didn't understand the question initially, right?
Okay.
And so traditionally speaking, is people do, I think the average now is 7 years. People move out of homes 7 years because of the equity and just committing to schools or communities or jobs or whatever the case might be. And so then if you look at it on, if you just go back to 2000 to 2025, you could typically look at the mortgage market and say every 3.5, 4 years, you're going to have a refinance of some sort, either lowering terms. Everybody thinks refinance is, cash out, keep it at 30. But, there's many a times that we can look at it and refinance it, keep the same payment, lower the rate, lower the term, and you've knocked off years of interest. Yeah. And people never talk about that, right? They want to tell you what the low interest rate is.
I mean, I remember, and it'll be the same season. I can't wait for this next season we're about to enter. Because I remember in 2020 or 2021 or 2022, I was taking clients that were at 4.5 on a 30-year fixed, giving them a 15-year mortgage at 2.25, some 1.875 back then, and their monthly payments still went down. Right. So these families that we have out there that they are paying 7.25, 7.5, and when these rates drop, you have to. I brought up always 3 different options. I brought to the table a 25-year fixed mortgage, a 20-year, and a 15-year fixed mortgage. And usually the 15-year was a super duper close payment compared to where their old 30-year mortgage was. But what's super brilliant about that, and this is selfishly my one of my greatest joys in the mortgage business, and when you've done it for 26 years, it happens here and there. When a client calls me and says, dude, remember that mortgage you put me in? I've just paid off my house.
No, 100%. Yeah, 100%.
It is by far one of my favorite things that ever happened. And there's probably, 10, 15 clients over my career that have called and shared that news with me. And it's just absolute blessing.
The amount of cutting the term is way more beneficial to me than the interest rate itself.
I'll tell clients all the time, this is something that you guys really need to write down and make sure you say it, that the interest rate is one of the least important things about the mortgage. The amortization schedule is by far the most important mortgage, because you're not going to keep this mortgage for 30 years, number one. Number two, when you go sell this house 3 years, 5 years, 7 years from now, do you want you to walk away with more equity that you principal pay down at the time of closing, or do you want the mortgage company to have made more interest off you? Right. amortization is more important than the
100%.
mortgage by far.
I agree with that, because I look at it as your home is your investment, right? You're going to pay something on it. Now, what are you doing to protect your investment and protect your equity?
Yeah.
And I think those are conversations that we have to have. And I think it's a scenario of our society that says, I want to talk interest rates.
Yeah.
I think the typical consumer doesn't even know what that means.
Yeah.
And so then when they look back at it and all that sort of stuff, which again is why I like doing mortgage coach stuff, is because you can give them multiple options with the amortization schedule.
Yeah.
Let's have a real conversation.
Yeah.
And use the client's history. We all have history. We all have a story. We all have a history. Use that story to, hey, in your previous 2 stints, this is what you did.
Yeah.
If we do that same scenario here, this is your outcome.
I mean, that's brilliant. I mean, I love Rich. He's dropping some great bombs for you. And this is something you guys definitely need to write down. So when you're doing, I'm a Todd Duncan disciple, so it's called the high trust call.
Yeah.
And when you're doing that high trust call, which is basically going over the application with the client, reviewing their credit, income, assets, what their goals are, so things of that nature, I think what he just said is absolutely brilliant. Absolutely brilliant. What it means is when you're going through, hey, do you work at this place? This is your income. This is your credit score. This is your qualifications, things of that nature. One thing also you want to do is, okay, so let's look at your track record.
Right.
The first home that you bought, what year was that? Great. Boom. Did you refinance or when did you sell it? Boom.
What about
the second home?
Refinance? What did you do to refinance?
Awesome.
Did you just lower the rate?
Yeah.
Did you tap into equity? Did you reallocate your investments? Did you buy an investment
Yeah.
property? Because those tell the story of their investment strategies.
Yeah, this is going to be an epic reel. I bet they chop this portion up. It's going to be awesome because then you're able to have that track record. Then you can look at doing either a 5 or 7 year adjustable rate mortgage, or you're doing a 1 or 2 or 3 year buy down for that client. Because if you're different and you advise them differently, you automatically become better than your competition.
100%.
And I think that's the lenses us loan officers have to learn to look through if we're going to be able to grow and scale in this specific market.
And I also would add to that, and I appreciate that, is the reality of interest rates dropping in September. Let's play that forward. If interest rates drop in September, how many people are just jumping at it to refinance right there because it's finally lower? Or do you have a strategy if they get cut 3 more times? Because there is a thought process, they'll get cut 4 times, September through the end of the year. So what does that mean? And I think too many of us try to jump at the first thing or put a half-point discount on that. And again, these are all investment strategies. Is it going to make sense to that client 6 months from now?
Yeah.
Because sure, taking them from a 7.5 to a 6.5 rate or a 6.25 rate, you're saving them money. But are you doing the best job for that client? And I think that's what we have to do to protect our industry and our integrity of what we do is have these strategies. And maybe it makes sense for that client because they just paid for college. You and I were talking about that on some stuff. Just paid for college, just did this. I need some relief right here. So yes, today it makes sense for me, but at least you can have that confidence to have that conversation with them.
Yeah, for sure. And I remember when my 2 sons were, I don't know, early teens, I was definitely doing a 15-year fixed, balls to the wall, paying double payments on a 15-year fix, and I was building equity. And now you got 2 boys in college, and it's we need to look at what's that minimum payment that I can pay?
Well, their dorm costs are probably more than everybody's house payment.
Dude, my I don't know if this is he's probably going to be mad that I'm going to rat him out. But my oldest son, he's a sophomore in Arkansas, so he's in the dorm last year. This year he's got an apartment. So he comes to me and goes, Dad, I want to get an apartment. Da-da-da. I'm like, dude, just be in the dorm again. Dad, I need to get an apartment. All right, you get an apartment. What's your rent? What do we pay for the dorm?
Right.
Dorm is like $9,000.
Right.
Okay, I'm like, cool. $9,000 for the year, so your budget's $800 a month. Dad, I found this awesome one. It's like a $1,050. Like, bro, what happened to $800 a month is your budget?
It doesn't include the food and everything else.
And this flipping Yahoo of a son of mine, he's about to leave for college this last week, and he goes, my wife says, we got to pay Braden's rent. It's $1,100. I'm like, it was supposed to be $800,
right?
And it was then it was I grudgingly approved $1,050. How do we get to $1,100? He goes, Dad, well, they called me. There's the penthouse of the top of the apartment, and it overlooks the pool. dude, the parties over there are going to be epic, Dad. I'm like, no.
And why are we going to school?
Yeah, like exactly. Hey, why am I paying for a 4-year party?
So it's, but I think these are real world conversations that parents and families are having that we need to take heed to and make sure we're adding value to that.
Yeah. It's I just got off a high trust call this morning. It's at 10 a.m. and past client, literally I did their mortgage back in 1999, 2006, then 2017. Their house paid off, which is absolutely super cool. And we went from a 30-year to a 15-year down to a 10-year mortgage. And the house paid off, and now they're buying a new house, and their financial advisor that I've referred him to is advising that they don't pay cash for the new house and invest that. I'm like, absolutely brilliant. Right. We got on the phone, pre-approved for $750,000. They're going to do 20% down, and they're going to go invest the other $500,000.
I love that. I love that. You and I talked, I think, at our lunch about the six lanes. And I think if loan officers not having a conversation with financial planners at this point, you're costing yourself business. Yeah. And because I think, last quarter, 31% of the houses in Dallas-Fort Worth were cash. Okay. So that can freak you out and be like, oh my gosh, nobody's doing mortgages. Well, 69% aren't, right? So it's just kind of how you shift and think about it. And so 69% of those, but maybe the 30 didn't know there was other options. Maybe didn't know there was different strategies. Maybe there's tax implications, things of that nature. And I think those are just conversations that you have to have that kind of sharpen our tools too, so that we can speak to people about that. Do you put the more money down, put less money down? What are your investment strategies? And I think that is really where we don't become ketchup and mustard. We do become a value add to their business.
Yeah. I mean, I think when you look at business, if somebody can fight your fight for you and you win,
right,
take the help.
Right.
Meaning that if you can get in front of a borrower and the borrower says, hey, I'm buying a house, I'm selling my house, I'm buying a house cash. I'm like, oh, that's awesome. Great. High five. That's awesome. Hey, by the way, you ran that by your financial advisor, right?
100%.
You ran that by him, right? And no, it's just what I want to do. I'm like, okay, so I'm confused. You hire a professional, you pay a professional, then you don't tell the professional the whole story, nor do you ask their price. If that's the case, I want you to order a pizza and expect that it's never going to come.
Right. No, 100%. 100%.
Right.
And I think that is the mindset. And to your point, it does kind of make you confused that, there's these folks that go to the higher education and get these certificates and do that. And then we dismiss their value on that.
Yeah.
So,
I mean, I think it's one of these things that it's really, really important that it's really easy to get a referral to a financial advisor.
Right.
And it's really even easier to get a referral from a financial advisor. Like, I did not invent this. It came out like the late 80s, early 90s, the fifth page of the 1003.
Okay.
And if you're old fart like I am, started in 99, you used to have to typewrite or handwrite the 1003, which is a loan application. And what that means is that you call and you get your credit reports faxed to you. So back then they came up with a term called the fifth page of the 1003. And so I don't get sued. Again, I did not come up with that word. The fifth page of the 1003, and you're asking the client up front, who's your financial advisor? Right. What do you rate them 1 to 10? Who's your CPA? Right. What do you rate them 1 to 10? And loan officers I've talked to, unfortunately, on a coaching platform or that I've read my book, they say, hey, I still really feel it's my place. Or I don't know how to ask. So I've got my opinion on how to ask and why it's your place, but what's yours?
Yeah, so my counter is going to be 2 going, and I'll answer your question. If you're not comfortable asking, then are you not being a consultant?
Yeah.
Meaning, for instance, you have these strategies, you have these things in place because the last thing you want to do is put them on a 10-1 arm.
Yeah.
Say, oh, well, you move every 10 years, you got a 10-1. All right, well, he's got a retirement strategy. He's got something he's working to on that end, and let's include him.
Yeah.
And that adds value to you. And to your point, they'll typically sell the transaction for you better than you will, because then it makes sense. I think I think it becomes a confidence thing, right? And because if you look at it, even for estate attorneys, when you deal with some older clientels, do you have an estate attorney? And then anything that you structure there, is it going to impede on what they're trying to do from their investment strategies? And so I try to ask it, again, Joe Stump and Dave, Tony Duncan, by referral only in the early 2000s, and they were doing client for life stuff, and I think when we look at certain things like that, it's truly, what are we doing to add value to our clients? And so, I don't know. Ultimately, I think you have to ask that question. I think when you get somebody on income tax, you've got their CPA right there. That's an opportunity. Mm-hmm. Hey, do we want to, I see Wally's your CPA. Do we want to include him on our presentation? Oh, no. Well, it's right there. And, so you almost don't even have to ask if they're like, hey, I'm self-employed. Oh, well, give me your K1s, give me your, and do that. So, I think you have to utilize the application to sell it.
Yeah.
Right. Because again, if they're coming to you, I do think they're wanting our expertise. They're wanting our help. And I think then these gives us different strategies in place to help them with that.
Well, I'm not passive aggressive, but I'm kind of a smart aleck.
Okay.
And one of the things I'll do on the loan application is I'll say things like, your application is incomplete, Rich.
Okay.
It's not complete, so let's make sure we complete it together so we can da-da-da. And they'll go through and, well, no, I completed everything. I'm like, okay. Well, the cash value policy on your life insurance spot was blank. How much is in your cash value policy for your life insurance policy? What's that?
Right.
Oh, I don't have that, but I've got a life insurance through Fidelity through work.
Perfect.
Okay. So do you know if your life insurance policy pays you while you're alive, or does it only pay when you die?
Right.
Well, that's the difference with a whole life insurance and a term life insurance, right? And like 99.9% of the time, like, yeah, it just pays when I die.
I pay it each month. I don't know what it covers.
Right. And then there's no cash value. I'm like, okay, so you can't build generational wealth if you don't have cash value life insurance.
Right.
And to be able to that's where like the infinite banking comes from.
Right.
And it's like an education process of what is infinite banking, what is generational wealth, what is the difference with cash value, what is the difference in term life insurance. And the simple response is like, listen, I know enough to be like YouTube video dangerous, but I'm not the professional in this aspect. What I'm going to do I have your permission to put you on an email introduction with my personal financial advisor that I've got a relationship with that I can refer you to?
Right.
10 out of 10. Who's going to say no to that?
Right.
No.
Because you're adding value to them and you're protecting their asset. And I mean, again, no matter what folks' income is, most, I'm not, I don't have the $1,000 bet that I'm going to bet with you, but I'm going to tell you that, majority of it, I don't care who you are, your house is your greatest cost investment, period. And so then how are you protecting it? How are you strategizing to it as you move forward? And I think that's the pride that we need to take in our business is they're coming to us for their biggest asset purchase, period. It's not a depreciation asset, even, through every point that we could make appreciation. Yeah, rates are high. You're still appreciating 3.5%.
Yeah.
So you're still making money even though rates are high. And I just think that's brilliant. I think your 6 lanes in your book is a brilliant piece that a lot of us miss, especially new loan officers. And so I think we've got to, make sure we're holding ourselves accountable to a certain standard too.
Yeah. I mean, I was asked the other day, like, why'd you come up with it? Why'd you release it? Why'd you share it all? And my answer is just really simple, because it deserves to be.
Yeah.
And I think what's like, you and I were competitors in the same city who didn't really know each other. I had a conference. You came out to it, a mastermind.
Yep.
We sparked up a friendship. We had lunch. We hit it off. Like, I want to invite you to play golf. Like, I want to become your friend. And the relationships that we can all grow into is such, like, enriches your lifestyle. It enriches like your personality in your life. If I would have looked at Rich and be like, dude's a competitor, like, screw that guy.
Right.
I'm gonna steal his realtors. Then like I'd be robbed of his genius. I'd be robbed of his wisdom. I'd be robbed of his relationship. And at the end of the day, like that's like, what kind of life is that?
No, 100%. And I would attest to that too. We met and then we did the thing with Brian.
Yeah.
And then I go to an event in Vegas, and there you and Brian are.
Yeah.
I'm like, man, these guys are everywhere.
Yeah. It was funny. It's also like we're supposed to have lunch like the week after or something like that. And he comes to me and goes, "Oh, hey," I'm like, "We're supposed to have lunch." I'm like, "Dude,
grab lunch here."
Yeah, we're in Vegas together. How awesome was that conference?
Oh, by far, probably one of my top 3 conferences ever attended, if not number 1.
I am so super proud of my career, but I'm so super disappointed that that's the first time I've ever been to Ford event.
That was his 5th or 6th one.
Like, what the heck have I been doing?
Yeah, and the connections afterwards and the people that hold us accountable. And I think that's the thing, is not being, there was a scenario I did a couple of months ago where, it was a training for a deal that I'm in. And the guy says, we check all egos at the door. And this is a guy that's, pretty competitive at what he does. And, but he was teaching us how to do something. And he goes, I'm going to learn as much from you as you are from me. Okay. And what transpired in that is, I think too often we can be immature and think, oh, well, I'm not going to share this with Wally because now he's going to get all my business.
Yeah.
Well, we've been in the same city for 20 years at least. And, I think you've been doing it 26. I got in it in 2000, and we ran across each other in the last 6 months.
Yeah.
Right?
Literally.
So, the reality is of it, I think it is that situation, because, again, you could tell people here, go talk to financial planners, and there's still going to be people that listen to this podcast that don't make a phone call to a financial planner. Either they don't know how, they don't want to, they don't find value in it. And so what we find value in, maybe somebody else does it. Maybe they look at it and say, well, I'm going to reach out and do an estate attorney. I'm going to work with all estate attorneys. And that's going to be, which is great. It's something. Yeah. But I think what we have to do is be confident in ourselves, but also be willing to listen. I appreciate the compliment for you, but I left our lunch thinking, man, I need to be doing this. I need to be doing this. I need to be doing that. I'm reading this book. I'm coming off the Forward event. I've got 4 other books I've got to read.
I am like the king of ideas,
right.
And absolutely, when you're ADHD, you're dyslexic, and you have dysgraphia, and you're unmedicated, your brain's like always going. Imagination is like 10x. But sometimes I gotta remember that not everybody has a 40-person team.
Right.
Like,
no, 100%. And I think you do things that hold yourself accountable to your 10,000 steps. I think you posted something like 9:30 one night.
Yep.
You were beaten, but you had to get it. You hold yourself
last
accountable.
Night.
I think we were comparing our alarm clocks just a little while ago.
Last night I got dinner with one of our lead processors at 6:30 at Del Frisco's in Plano, and we got done at like 8:45, and I get home, my wife's already in bed with like her 9,000 dogs, and she's like, "Come to bed." I'm like, "I gotta go walk 3 miles," like, because like it was crazy, man. I knew I made the mistake. Right. I knew I made a mistake, and it happened probably 2 weeks before that. I went 23 days in a row of doing 10,000 steps in a day. And we had just come back in town, and we had a dinner with a lot of my teammates, like leadership wise, and we're out to like almost 10 o'clock at night, having cigars, having a great dinner. We're at D Lincoln, and I get home, and I'm like, I look down at my Whoop, and it's like 6,900 steps, and it's like 10:30 at night, and I'm sitting there, Rich, and I'm like, dude, you gotta get up, dude, you gotta go, dude, you gotta go. And like, I just passed. I wake up the next morning, I'm like, mother trucker.
Right.
Like, I was so mad at myself. 23 days in a row straight, 10,000 steps. And like, then I had to start over.
But can I tell you the value of that, from a standpoint of me, right, is being consistent with it, that you got back on the bike the next day.
Yeah.
Right. And I think that's with anything in our industry. If for me as a segue into just something to keep people positive about it, we can all work and we have that off day. We have that day for whatever reason. Life happened. The market goes crazy. This happens. I've got meetings. I got to go drop a kid off at college. I've got to go pick a kid up, whatever the case might be. And to hold ourselves accountable and yourself by putting it out there.
Yeah.
That, hey, I do 10,000. I'm sure you've got a group of guys that will reach out to you. Did you hit your steps today? Did you hit your steps today? I've got a group of guys that I work out with at 5 a.m. every morning.
Yeah.
If you miss one day, even if you're taking your kid to college, man, they are wearing you out.
So like, and it's interesting too, because like my executive partner, Caleb, he's been with me for like 9 years. He comes to me in January. He goes, "Hey, I'm doing 100 push-ups for 100 days challenge." And he's like, "You should do it with me." I'm like 20 pounds heavier, overweight, And I'm like, no. And I come the next day, I'm like, all right, let's do it.
Yeah.
So I started doing it with him, and the first week, I'm like a stud.
Yeah.
The second week, third week, shoulders are sore, and he's still got to do 100 push-ups a day. And like by the third, fourth week, I'm like, he quits. I love you, Zig. His name is Caleb Ziegler. And he quits. And I'm like, I got an opening. I can quit too.
Yeah.
And I'm sitting there thinking, I'm like, I got to prove this guy. I got to prove to myself I can do 100 push-ups. And I pushed through it. Then it became 100 pull-ups a day, assisted pull-ups, not assisted. No, 100 pull-ups, assisted pull-ups. And now I'm doing that. Plus also then working out in the morning and then doing the 10,000 steps. And I feel like where loan officers really lack is they don't keep challenging themselves. They don't keep seeing, okay, if the bar is here, how do you take it that next level? And obviously, unless you live under a rock, Alex Hermosi, one of my favorite things is video. Literally, I've watched this video 5,000 times. Talks about how like the Uber performers, they feel like down deep inside they're so much better than the competition down deep inside, but they also feel like they are never going to be good enough.
Right.
But also on top of that, cherry on top of the cake there is that they also feel that not only are they inferior, but they don't have an off button simply because they always feel like they're behind.
Right.
And it's an awesome feeling of just knowing that you can keep pushing yourself. Right. So, but
challenging ourselves too. Your book. You read 5 pages, 10 pages a day. Whether it's your book or I'm reading Dan Martell's book as well.
Buy Back Your Time.
Yeah, Buy Back Your Time.
Great book.
So we got that at the conference on that. So 10 pages a day, so 5 and 5. But it's challenging you to be better, and it's challenging you to think differently. Yeah. And then when you have clients that present something to you, you've got a different mindset of how to handle it. I would tell you from my ability to work out every day at 5 is if I don't work out, then my attitude, my day is completely different. Okay. And so then it's just a reshape of me is like, as soon as I get back, I put my numbers in, track it. And then the next day I'm already signed in. So I'm already signed in for tomorrow's class.
Nice.
So I don't get to today, at the end of the day, thinking, man, I'm tired. I'll sleep in tomorrow. I don't give myself an out on that, because I think if we are quick to give ourselves outs, whether it's the push-ups or whatever, I could do the 100 pull-ups a day. I don't know if I can do one, but that being said,
they're assisted.
No, they're
assisted.
Assisted or unassisted.
Because I'm going to run into someone, you're like a pull-up. All right. Yeah, I'm like, dude, I can't do 10. But they're assisted.
But I think it's, again, it's to challenge ourselves, because you've been in this business 26 years. I've been in this business over 20 years, and we are not necessarily guaranteed tomorrow's success without doing the work. And I think that's the challenge that we all have to put in is this is a awesome job that we still get to help people with the mortgage of a dream of a home ownership. And the reality is of it, we still have to work and earn that trust and respect.
Yeah. Plus, also, I think what I love about the wisdom you share, you probably do a lot of good self-discovery about yourself, right? And I would encourage everybody to do that. There was a coach, his name is Pat Mancuso, that coached me back in 2012 to 2017. And I was in a coaching session with him, and this monumental moment. And then I was going through, and I was like, dude, it was an awesome week. I got 9 contracts that week, and I locked all 9 of them and won all 9 deals. And about a month and a half later, I got 6 contracts in that, and I lost all 6. I lost all 6 other competitors, different lenders, banks, and he asked me, he goes, hey, what'd you learn differently? I'm like, no, well, this dude's a schmo. This is and I was like, and I was like, and he reminded us of what we learned and Bible study class when you were 4 years old. Like when you point away at someone, there's 3 fingers pointed right back at you, right? And he was bringing up, he goes like, okay, so what are the top 3 reasons why you feel that you missed out on those deals? And it was like, I could have improved on speed to response. I could have improved on scripting. I could have improved by getting more aggressive on the rate that I was offering, whatever the case was. And that really taught me, and I was so super proud of myself because like a week and a half or 2 weeks later, I had 7 contracts come in for that week, that Monday, and I won all 7. And it was always like a challenge to myself. Okay, how can I stop doing the best I can do? And how can I start doing it the best way it can be done? Okay. Step 1 of doing something the best way it can be done is self-discovery, looking in the mirror and being honest with yourself of where you can improve.
Nope, 100%. And segue on to that, I didn't know we were going to talk about this today, but it's interesting that you mentioned that. One of the things I think we can do today with all the tools of AI and things like that, you lose a deal. I've got a lower rate somewhere else. Or I'm not interested right now. Whatever the case might be, you can take that question and whatever AI component that you do, whether it's Chat or Claude or whomever, and you can put that in and give me the top 5 responses to that objection. Okay. That's the ability for self-improvement. You might not win that deal, but guess what? The next time you hear, well, I've already got a low rate. Well, then you can challenge it with that. And I think too often we typically have to fight against going up and down a roller coaster of emotions because we want to win every deal. I've never met a loan officer that said, I'm fine with winning 50% of the deals. We want to win 100% of the deals.
Yeah.
And whether it's guidelines or life or whatever that we tend to hold that on. And we've got to be able to cut that loose quicker, but at the same token, learn from it where you do have that self-reflection. And that to me is probably my greatest maturity in the last 20 years is I would get mad and I would get upset and I would get frustrated and, oh man, that's a terrible referral partner. And this is this and this and this, blaming everybody except me.
Yeah.
But now realizing that maybe I didn't find out what their true need was, and that goes back to, well, maybe their need wasn't rate at all. And I kept talking rate.
What I've also learned over my career is that the loan officer, let's say it's 3 loan officers competing for that same client. The loan officer that has the deepest emotional connection with that client wins the deal.
I would agree with that 100%.
Deepest emotional connection with that client wins the deal. Where and that's where like a professional comes into play. An amateur loan officer feels whoever's got the lowest rate wins the deal. I can't tell you how many times 10 fingers and 10 toes. I need more than that. Tell you how many times I talked to a client, hey, Wally, I found a lower rate, but I'm still going to go with you.
Right.
Hey, Wally, I found lower fees, but I'm still going to go with you. Right. Hey, Wally, they've got this better option, but I'm still going to go with you. The relationship and how deeply you know your clients and how they feel that you know them and how deeply they feel that you care about them is 10 times more important than what your interest rate is.
No, 100%. And I think that goes back to the quality of the application, the quality of the questions, right? What are we trying to, come? And then a client says, oh, I want the lowest rate possible. Well, the lowest rate possible is cash. I mean, but you kind of say, I don't try to be jerky, but I think you say that at that point, they do kind of laugh like, oh no, I want to finance it. Okay. So now we're off the lowest rate possible.
So we're 7%.
Right. But I think it's being able to have confidence in that too, to be able to have that conversation, right? Because I mean, if it is truly just rate sensitive, the cheapest rate is cash, and so be able to have confidence with that, but at the same token, have that deeper relationship with them. And typically you make somebody emotional, laugh, cry, whatever, they're going to end up opening up more to you and tell you what they need.
I mean, every single loan app that I've done since like 2004, when I learned this from Todd Duncan, has always been, hey, Rich, tell me, are you excited or nervous about buying a home? And
I'm nervous. Well, why are you nervous? I can't afford. I don't know if I can afford the payment. I don't know if I can afford.
And I'd probably say 7 out of 10 times a borrower will say they'll laugh. Can I be both?
Right.
And I'm like, you can be whatever you want, but let's do this. Let's talk about what you're excited about second. Let's talk about what you're nervous about first.
Right.
Because I want to pull them. I don't want to push them. if we're talking about what they're excited about, then it's like sunshine and rainbows and any
Right.
of course they're getting a home.
Right.
They're excited. But what is the deepest, darkest fear that you
Right.
have about buying a home?
Okay.
Because if I can fix the deepest, darkest fear, I've emotionally got you.
Got you. No, 100%.
Right?
100%. Because a lot of us are anxious. A lot of us are concerned. Hey, is this going to show up? I had this, I had that. Whatever the case might be. Because for the most of us, everybody gets financially naked in front of us because we've got to see the picture.
Yeah.
And there's something they know that they're not going to just come out and say, hey, back when I was in college, I forgot to make a payment to XYZ. Well, they're going to see that and they're going to think it's going to be everything that's going to tell them no. And they're excited about the house. And I love that. I think that's a value add that you do that a lot of us can learn from.
Yeah, I mean, candidly, I do it for me more than I do it for them because it allows me to get to know them.
Right.
And you do millions and millions of loans, and I think I tallied it up the other day. It was like $1.5 billion worth of loans that I've done. And I said that you sit there and think about like it's not about me; it's about them feeling in a way that they're listened to. Them feeling in a way that they're cared for,
right.
Them feeling in a way that they matter as a human being, not as a number. Right.
Which goes back to not running through a fast food drive-through, just saying, hey, I want number 3. Well, number 3 might not be what you need, and so you're thinking it's simple because that's what you're accustomed to. Let's find out what it is that you're challenged on.
Let's see if this goes anywhere. But my question is back to what you just said earlier about the lowest interest rate is cash. Mm-hmm. I love the wittiness aspect of it. But was there like a mental formula that you went through of like, hey, I want to like not be a smart aleck, but I give me some like crumbs of how to follow that wittiness.
Yeah. So one of the things that, when I looked at the numbers and said, okay, 31% of the people are buying cash. I'm thinking, okay, well, the stock market, I think as of today, is at an all-time high, right? And so I know there's been chaos here and chaos there, and I'm not trying to get into all that. But let's just say it's at an all-time high. So your investments, in my opinion, are at an all-time high without even looking at it, right?
Yeah.
And so they're making, again, you can be conservative. You can say 6%, you can say 9%.
Yeah.
I'm sure there's somebody out there making 12 or 15%, right? And so then I'm looking at it saying, okay, well, if an interest rate is 6.5%, 7%, and you're making 15, you're still plus 8 with keeping that money invested.
Yeah.
Right. And it's got tax, it's compounded, it's got tax implications, It's got all that. So that's not the question they're asking us then at the 6.5%, 7% rate. Right. And so my thought is, okay, if I'm not going to talk rate because at 100% cash, there's no rate that I can give you. That's, I'm not giving you a rate on top of your cash. Right. Yeah. So it just turned into that piece of if you want no interest rate, no lender fees, no, none of the things I can provide for you, it's cash. And if not, let's talk about what you're trying to achieve so that we can fit in the box. And I did, and to your point, most of the people are like, that's funny. I don't have, $600,000 or whatever the case might be.
Yeah.
Right. But I think it also gets them off of, it's not just about rate, which goes back to, I think you and I are 100% aligned on that. I think it's not the most important question in a mortgage transaction is what my rate is. Can I get approved? And then which options do I have?
Yeah. I was talking to, I think it was yesterday at like 4:30 or so. I had another loan out, first time home buyer. They're like the perfect first time home buyer. And they're referral from a financial advisor and 812 credit score, nice. Like 600 grand in the bank, makes like, I don't know, 31,000 a month in income, and they're buying like a starter home at 600,000, right. And they're putting 20% down. And I'm sitting there thinking, I'm like, and then I asked him, I said, well, we want to shop around, we want to have options. I'm like, I highly recommend you do that. Mm-hmm. Can I encourage you with, here are the top 5 questions you want to ask other lenders when you shop around? Yeah, would welcome whatever, anything you'd want. And I'm walking them through the top 5 questions that you want them to be able to ask a lender. And it's about like, none of them is about rates and fees. The top 5 questions I have them ask the other lenders is, okay, how'd you come up with a strategy that you're choosing for me to go on? Right. Well, no, we're just doing a 30-year fix. Oh, so I can get that from Wells Fargo. Right. I can get that from Bank of America. Right. I can go lendingtree.com and go find a lower rate doing 100%. That. But Tell me about where do you see my amortization schedule per my habits of when I normally pay a house off?
Right.
And when we went through like 5 questions like that, the client was like self-discovering, like, and he actually said this. He goes, I don't think I need to shop around anymore. We want to use you.
Right.
You're talking to us like no one else has talked to us before. And when I started going through options with him and discussing it, I said, hey, I can give you a 30-year fix, 20% down like everybody else, but, do you feel, the simple question, look at your crystal ball for me. If you look at your crystal ball, do you think interest rates are going to go up or do you think they're going to go down?
Go down.
And I'm like, 10 out of 10 times they're going to say go down. Okay, so here's what I wanted you to do. I think we need to take a 30-year fix and throw it out the window. Okay, because if interest rates are going to go down, I want to make sure that you enjoy the ride until rates go down in 2026, 27, whatever it is, rates-wise. And we started talking about a 1.0 buy down. I'm like, well, is that a new program? Like, no. Well, it's new to most lenders because most lenders, 1, can't offer it. Most lenders, 2, don't know how to actually frame it where it's beneficial. And in this market right now, I mean, if I'm closing 10 closings a month, at least 4 to 5 of those closings have buy downs on them, and they're not paid by the borrower, not paid by the buyer. The seller is paying them for them right now. So talk to me about did you choose a realtor that's extremely verbally strong, or did you choose a realtor that you're friends from church? And they chose a realtor that was friends from church. And while they're telling me who this realtor is, I look him up on Redder, and I'm like, yeah, they've closed like $3 million in 2024. Right. And I said, hey, all due respect, you can choose whoever you want as a realtor, but we're talking about a lot of money, dollars and cents here. With that being said, would you be open for you to talk to my realtor to have a conversation, because they're incredibly verbally strong and they can help you negotiate. So boom, I get a referral from a financial advisor that then I turn around and I did that, got a $600,000 pre-approval, and I've got a client that's using me and not using the lender, and now I got a referral to my realtor. Right. What's 3% of 600,000? Right. A lot more than that realtor had from like day one, right?
No, 100%.
And it's $18,000 commission I just put in my realtor's pocket because how I framed the conversation. And when I called that realtor last night and gave her that referral, and it's like,
well, now you've teed her up too for what's important to that client.
Absolutely. And then I'm going through it. That I also bring up that, okay, hey, so I'm looking at your tax returns. They use TurboTax, and they said, hey, my advice was, okay, TurboTax is totally fine if you're renting an apartment, which you've been for years, but moving forward, you're going to be purchasing a new home. Okay. I need you to sit down with my tax strategist and understand what are the IRS laws out there that you can take advantage of over the next 5 years so you build generational wealth. Right. Do you know a good one? Yeah, I think I might know one or two. Boom. Right. I got to refer out to. So I generated 2 referrals out. One was my realtor last night, $18,000 commission. One was a tax strategist that he charges $1,500.
Getting a first-time home buyer,
first-time home buyer,
a family, and all that.
Because then the next thing I said, okay, I want to give you a 3rd referral, but I'm not going to give it to you right now. I'm going to give it to you on our post-closing. We do a 7-day call after closing, a 30-day call after closing. We call you 6 months and do an annual mortgage review after closing. And I said, we need to set up a family trust. We need to set up a family will, because if we don't, if something happens to you and you're putting this $200,000 down, all that goes to probate. So you need to protect that $200,000 equity you have by helping you set up a will, set up a family trust. And then now I know I've got a future referral. Right. But what I want everybody to understand out there, I was not selfish last night and just accepted that commission. Right. I thought about, hey, how can I compound my success? And what we teach at 24/7 Mindset is how to become a multiplier loan officer. 99.9% of loan officers out there are an addition loan officer. They go to a realtor, they get a referral, they close the deal, they go back groveling back to the realtor. Right. What we teach at 24/7 Mindset is like you become a multiplier loan officer. You turn 1 commission into 3 commissions. And by the way you do that is when you get that referral from that realtor, you refer that same client out to a CPA, a financial advisor, a family will attorney, and an insurance agent. If you follow our scripts and models, our coaching clients will walk away with a minimum of 2 referrals back. You just turned 1 commission into 3 commissions. Right. You're a multiplier loan officer. Right. So I was a multiplier loan officer on the client last night because I wasn't selfish and I didn't only think of myself, but more importantly, now I got those 2 referrals out to them, and now I'm going to get more referrals back from it, and the cycle just keeps going over.
Well, the value of that is the value you provided to that client, because he came in with an order. Yeah, I want. I'm a first time home buyer. I want the best thing.
I'm going to shop around,
right? And that's some of the same strategies I use too on that, Wally. The first thing when you used to have somebody with an 812 credit score, 600,000, putting 20% down.
Yeah,
I think cash is king, right?
Yeah.
And so then I'm thinking, okay, your PMI is not going to be that much. We are in a refinance trend, more than likely. Yeah. Do you need to put 20% down? Your buy now PMI is probably less than 0.5% on an 812 credit score, and so I think there's different strategies with that. To your point, that you can refer people out. Now you tell your financial guy who referred him to is, hey, I saved him, 60 grand.
Yeah.
He's thinking, okay, that's more I can invest in it, and so there are strategies like that. I think that we all have to think about. You got to be confident and prepared, though. That goes back to you were prepared for that conversation. You were not. You checked your ego at the door. Here's 5 questions I'd ask any, so, hey, they go from Wally and they call Rich. I'm probably going to answer some of those same questions, maybe not all 5 of them, right? And so you take the risk of losing a transaction, but you're giving them value.
It's not a risk, though. I mean, the questions are geared for whoever they asked is to fail.
Right.
I think the reason, people ask me all the time, like, dude, like, what the hell's wrong with you? And I'm like, well, I don't have an off switch, first of all, but like, to do $100 million in volume in a year is like the pinnacle of mortgage.
Right.
Well, you get to that pinnacle and you're 37 years old and you're like, is this it? This is the top of the mountain?
Right.
Okay, I'm going to get, then next year is like 150. Then it goes to 200 million. It's so much easier to do so much more volume when you become a multiplier loan officer.
Right.
I worked to be the hardest working loan officer in the room until I learned how to be the smartest working loan officer in the room. Then I wrote a book about it and put everything out there for everyone to follow.
Now, who's going to pick up the book and actually do it?
Exactly. And I think it's one of these things where like, and somebody said that too, it was about 4 months ago, like, dude, I've read your book. Like, I'm going to copy everything you did. I'll be able to close as much as you do. And I said, I hope you do.
Yeah, 100%.
And it's unfortunately not, the implementation aspect is probably the biggest challenge.
Execution.
Yeah.
And being confident with holding yourself accountable to hitting those targets every time.
Yeah. I don't know if you ever play games with yourself, but I play an accountability game with my 2 sons, and you've got a boy and a girl? Or?
I do. Yeah.
Okay. Good for you. I'm jealous of that. I've just got 2 boys. And my oldest son, he's probably the smartest, the biggest smart aleck you ever meet. Sometimes you just want to punch him in the face. When we started talking, and during COVID, he'd come in my office when I'm on the phone with a client, and I'm going through like after we got off, I'm like, see how like the client went here, dad went here like this, and then I framed it this way, and I won the deal, and then he starts learning that, and he starts using that on his mom, and then his mom gets mad at me. But what I'm getting to is like, I used to come home and be like, hey, Dad, how's your day? I'm like, dude, I got two apps today. I got 3 locks, and this is how much I generated in commissions today. To the point where, like, probably when they were in high school, they come like, all right, give me the rundown. How many apps did you get? How many locks did you get? What did you generate today? And that was a highlight of my day because I wanted to stick my chest out to my younger son. Didn't care. My older son was the one that kept on challenging me. But it's funny. Like I played games like that with myself to keep challenging myself, where I think, unfortunately, not everybody is sick in the head and they just will accept their success.
I guess my strategies or my thoughts on that is you're always wanting, this is a competitive industry, and this is the thrill of the deal motivates all of us. And I think having certain numbers that we can hold ourselves accountable to, you can look back in a week and tell what your week was.
100%.
And if you're not holding yourself accountable to that, there's been, groups I've been with is how many locks do you have? Because if you're not locking loans, you're not closing loans. How many conversations you're having. If you're not having conversations, you're not closing loans. And that goes back to some of the Duncan stuff too. Is are you having those conversations with the attorneys and the agents and the financial planners and all that? But I think you have to know your numbers, and I think majority of loan officers don't know their numbers.
Well, one of my favorite exercises, and I wrote this in my book. Came from Todd Duncan. It was called the 55-5 rule. I think he calls it the 5-minute rule. I called it the 55-5 rule. And it's, I was going to him and I was like, I got 2 assistants. I need to hire a third. I need to hire a fourth and blah, blah, blah. I was about to get over my skis financially. And he sits me down and he says, hey, all right, here's what I want you to do. I want you to work for 55 minutes, write down what you did for 5 minutes. Work for 55 minutes, write down what you did for 5 minutes. Work for 55 minutes, write down what you did for 5 minutes. And we structure that to where it was like an 8-hour day. And he goes, I want you to do the last day of the month. So I do the last day of the month and I'm going through it. And he goes, all right, at the end of that, grab 3 highlighters. Grab a green, a yellow, and a red. Green is what activities did you do that day that are dollar productive? Where'd you make money? Yellow activities are activities that lead you to making money, reviewing an application, things of that nature. Red activities is stupid email. It's like where you're like the processor's assistant.
Right.
And when you go through this, and back then I was doing $100 million in volume. And he comes and I go through it. I'm like 40% red time. Another like 35% green time. I'm like, I'm less than 30% of my days, dollar productive activities. Like, what the blank am I doing? Right. And so I went to my assistant. His name was Caleb at the time. And I said, Caleb, I'm going to pay you $500 a week as a bonus. Okay. So you got $2,000 on the table here. I need you to track my calendar. And if you can get me to 75% of my day being green time, then I'll give you a $500 bonus every week. Okay. And that dude was like a bangy. He would, any like 30-minute appointment on my calendar, he'd go to him and say, hey, you're on Wally's calendar for 30 minutes. Do you really need all 30 minutes? And you need 15. Okay, I'm going to change it to a 15-minute meeting. What are the topic points that you need to have a meeting with Wally for? Okay, I'm going to put that on the calendar, right? What do you need to have prepared so you can talk about those topic points with Wally in the meeting? And he helped me become like super duper efficient through my day. And he was, I'm happily, you know how much money we make on loans, right? I'm happy to give him $500 a week as a bonus to keep me 75%.
No, 100%.
And when I was doing, the volume I was doing, if you go from 100 million to 150 million to 200 million, I didn't become smarter.
Right.
I didn't become better at doing loans. Right. I didn't become a better loan officer. I just became more efficient during my day, which allowed me to be more effective during my day.
Well, it's at the end of the day, we are green. I mean, we need to be out making money. Makes the whole ship run, and so at the end of the day, if we are spending time on an email that's negative or an email that's, we don't need to be involved in, that shouldn't, that can get to, hey, I'll respond to those emails on Friday afternoon at 3:00, whatever the case might be. But again, one of the things that I think people need to take away from that is the structure that you provide to yourself to hold yourself accountable. I've had, I think, 3 meetings with you, and every time it's been very well set up. It's been very, very well prepared. Here's when you're going to start. Here's when we're going to end. Here's what we're going to do. And not once did I think, man, what's this Wally guy doing to my schedule? I was like, okay, I actually took it as I appreciate him setting boundaries for us.
Yeah.
So because we could probably sit here for 2 or 3 hours and just yap, right? But at the end of the day, we both have things that we need to do, and we want to make sure we hold ourselves accountable. And your partners do that too. I have all this thing where, hey, agent, I want to meet with you. Well, why? Like, what are we meeting about?
Yeah.
Like, bring value to them. Give them something that helps their business. Not, most of us sit up there like this. Hey, what do you got for me? Yeah. Hey, I want to tell you about this new product, about what I'm seeing. I did 15 loans last month, and 4 of them had, buy downs. Are you offering that on your deals? I want to help you win more deals. Yeah. Now you're a value add to them. So,
I mean, if you're not a loan officer right now calling listing agents and helping them sell their houses by offering buy downs, like, what are you doing?
100%. You should know the days on market. You should know what the strategies are. You should ask them, hey, what I saw your listings on for 78 days. Do you know why? No. Okay. Have you got any feedback? No.
Yeah.
And have that confidence piece with them that you have a solution. Even if they tell you, I don't know, it's not priced right. Okay, well, perfect. Let me do a little research. I'll call you back. Throw that into an AI source that, an agent doesn't think their house is priced right. What strategies could we come up with? And now you call them back and say, you don't tell them, hey, I went on GPT and got this. No. But, hey, here's a couple strategies I realized about your neighborhood.
I mean, my favorite conversation is telling them, hey, I went on Redfin, I went on Zillow, and I went on your personal website. I don't see anywhere on here that the house has a preferred rate of 3.5%. Right. Well, no, rates are 6.5%. What do you mean 3.5%? Okay, so with my VIP referral partners, what I offer is we help them market their house through our marketing department with a 3-2-1 buy down option. Rates right now are about 6.5. So year one's at 3.5. Year two is at 4.5 and 5.5 and such from there. And I say, hey, difference in your $600,000 listing, if the rate was 6.5 versus 3.5, is like an additional $1,300 a month.
100%.
Right. So I can help position you with you not dropping the list price, but offer this. This is how much a 3-2-1 buy down is. And if this is too much, here's a 2-1 buy down. And if that's way too much, let's do a 1-0 buy down. And if you're not willing to do any of it, can I become the preferred lender of their house? And I will offer a lender paid 1-0 buy down for only one thing in return that I want to ask. Tell me about the seller. Are they moving an apartment? Are they relocating? Where are they going? And can you refer me to the seller? I can earn their business, which allows me to offer your buyers that come in a free 1-0 buy down from the lender.
Right.
Like, these are
strategies
thinking outside the box, dude. Like, I gotta put food on my family's plate. I gotta provide. I got $1,100 rent. Oh, this freaking Yahoo.
No, but I think that is, again, we should be working.
Yeah.
And to me, that's green time. Now you're coming up with strategies. Now you're going to get a new agent that's never worked with you, and you're going to get a new seller, because very few people sell and then live on the street.
Yeah. I mean, and also, like, I'll talk about being a smart ass. I'll ask that realtor, like, do you have enemies that work in your office, or do you have friends that work in your office? No, I have friends. That's a dumb question. What do you mean by that? I was okay. Well, what will it take for you not to keep me a secret?
Yeah.
Boom. I got a referral from Sally to Jimmy to Bob to Amy.
Right.
Then now I'm working with a team. Now I'm working on an office, and the business is growing and scaling. I didn't do as much business as I did by being better than everyone else. I just focused on how do I be different.
Right.
And I was brave enough to be able to have these conversations. And when you're different and you're brave, your success is untouchable.
And consistent.
Yeah. Because you don't know how to
can't do that one time on somebody that has a listing, and I know you don't, but I think it's important for everybody out there to know you consistently do this. Yeah. This is not a facade.
Once you see it, you cannot unsee it.
Right.
Once you say it, you can stop. You cannot unsee it. All right. So believe it or not, it's already been an hour, and the time is fun. Like, I really enjoy talking to you.
No, you're good.
All right. So I'm going to give you the closing thoughts.
Okay.
So you've got loan officers out there watching it. Number one, if you're not following Rich on social, you need to. Number two, I've got one more question. This is go by a minute. What is that rooster you keep showing a post of?
Okay, so that's our gym, right?
Okay.
And so we changed locations, and this metal rooster showed up, and so then it became our tagline or our call, because there's no emblem on it. There's no nothing other than it is a rooster picture that we use every day to show our accountability at the gym.
How awesome is that I don't work out with him, but I see a rooster posted on a daily basis, and talk about the marketing genius aspect of it. I guarantee you got realtors asking you that. You got referrals.
I actually, full disclosure, a realtor I worked with was in Cabo. And she goes, "Your rooster's here." And that's the first time I knew that it was making some headway.
Yeah, for sure. All right. Give them the last closing thoughts of wisdom. Right now, it is, what is it? August 2025. Where do you want, what do you want to impact them with?
Say it one more time.
What do you want to impact the listeners with as closing thoughts?
Yeah, I appreciate that. I think, again, I'm gonna tout on two things that I think is imperative as you move forward. You mentioned something briefly, annual reviews for your clients. If you're not already setting that up where you're having an annual review at this time of year, knowing potential rate cuts of 3 to 4 times in the year, and knowing that if you've done something for them in the last 3 years, that you've got a higher interest rate. And so you do have ability to talk with them on that. See if they've got a kid going to college. See, have that annual review. Utilize the strategies of the financial planners, the divorce attorneys, the CPA. Hey, did you ever sign up for that guy I told you to? These are things that you've earned the right to have those conversations with them. And you don't need to make it long and all that sort of stuff. Hey, I've got, again, 15 minutes. Hey, I want 15 minutes. I'm just checking your file to make sure that we're prepared as the market continues to change, and have that conversation. And I think ultimately, again, we were challenged at this at the Forward event. If you're not spending some form of time in AI daily, you're missing the boat. And the reason I say that is because it can help you be a better strategy. There might be things on here that you've heard us present. Put it in there. Like, hey, they were talking about a financial planner referral. How do you best do that? Put that in there and get better. Challenge yourself to be better. And I think that's ultimately what we have to do as an industry. The market is the market. Homes are going to continue to sell. People are going to continue to move. People are going to continue to move here. You and I had our lunch meeting, talked about Salina getting 36,000 homes. Some areas in North Texas and Denton area getting 13,000 homes. Follow HEB. HEB setting up all over the place. Follow their business strategy and homes will come. But I think you've got to challenge yourself to, I said that because HEB opened up and prospered today.
I heard it. Saw the news.
So that's what I would leave you for. This is the best time to buy a home. Was it yesterday? The next best time is today. And I think if we just have that mindset, we continue to move the needle forward.
Awesome. Well, I got nothing to top that other than thank you so much for listening.
Thank you, Wally, for allowing me to be a part of this.
Dude. Yeah. We'll look forward to teeing it up. So if you have any questions for me, please drop in the comments below. If you want to follow Rich, feel free. But if there's anything I can do to help, definitely please reach out, and we'll talk again soon. Cheers, guys.
So thank you so much for listening today. It means a lot you took time out of your day. I don't take that lightly. Understand very clearly that you're very busy. With that being said, if you want to continue your journey and learn more about 24/7 Mindset, if you're on Facebook, which I'm going to guess you are, then go to 24/7 Mindset on Facebook and join the private community. I do coaching tips on there on a daily basis, but from scripts on there to systems on there, models, and the ability to be able to grow and scale a business while you have a quality of life. Hope to see you there.